Hello, fellow traders. Today we'll be going over the general tips about investing and the part 2 of my worst investment. Now let's jump right into it. First thing I want to get straight is that people get greedy. It's in all of us. For me personally, I didn't get enough when I learned about bonds and ETFs, so I decided to jump into learning stocks, because who would want to just stay passive, right? And after I learned stocks, I realized there's this thing called options. And who would really want to just get 15% return when your returns can be 100%, 200%, tenfolds? That was really where the greediness come from. We tend to be very aggressive in learning new things and pursuing new things without really creating a good foundation. The example I'm going to give you guys is, there's this guy recently on Wall Street Bets. I love this sub, by the way. You guys should all subscribe to it. This guy basically put in 45K of puts on Apple. 45K on puts. That was a YOLO play, as we all know it, and obviously it didn't pan out for this user. I'm not saying that option is bad or anything. I'm just saying that there are methods to proceed with options. One of the ways I can name on top of my head is the options of Mary puts. Mary puts basically provide a layer of insurance on top of the stocks that you own, in case that there is a short-term downtrend. You can activate or sell the puts to earn the profit, or I guess limiting the risk. That's the whole reason why option existed in the first place, is to mitigate risk. But just because it mitigate the risk, it doesn't prevent you from continuously gambling in it. People tend to think that options are cheap, so they can buy a lot and they can make a lot of money without really using a lot of their capital. And I think that thinking is really wrong. Just because it takes really little to get started, it doesn't mean that you should dump it all on, say in this case, the Apple puts, this blue chip company that tends to do really well over the earnings. It decided to put in 45K into this. It doesn't. I mean, it's really good as a viewer on the side, but you never want this to be you. You never want to lose this much money. Especially when I heard about this, I think not all of it is his money. He had to loan it from somewhere. And another tip from me is that you never want to play with other people's money, because it already hurts enough when you lose it on your own money. And when you play with other people's money, it gets even worse. And that's the tip. Second part I want to point out is my worst investment, part 2, and it's obviously Bitcoin and rest of the cryptocurrencies. I personally put a lot of money without knowing where this is gonna go. I mean, sure, you can argue that over the last few months that it's been coming back shortly. But imagine this, okay? Imagine I just put those money on blue chip companies instead. So say Facebook or Apple during that time. Okay? I'll be pretty set. My financial position will be pretty set. Instead, I'm still down more than 50% at this point, and I have no idea if the cryptocurrencies will come back. That opportunity cost is something to factor in when you put in your investment. I'm not saying cryptocurrency is bad. I'm not saying that. I'm just saying you can put it in your portfolio. I would say 5 to 10% if you're not really sure what you're doing, but you want to get a piece of the profit. And I would say 20% maximum of your portfolio if you're really curious and you have strong belief in blockchain technology, then you can put 20% down. I have no issue with that. It's got to be something that's you're willing to lose, and you don't have to use it for a while. So never use your 6-month emergency funds that you save up for this kind of investment, because it's really risky. I bought in December of 2017, I believe, and everything went downhill from there. Do not do that. Do your own research, and never really let the news direct your decision as to whether you're supposed to put in the money into this, because this is a big matter. Back in 2017, everyone was hyping up so much about this. I would say do not follow the trends, okay? Never follow the trends. It pretty much always pops. Look at dot-com bubble, look at financial crisis, look at what else? Cryptocurrency bubbles. And now what do we have? We have all these IPOs that's coming out of nowhere. They're not profitable, and people just been hyping up. Look at, we have Beyond Meat, right? Beyond Meat right now is going strong, and that's really great for the shareholders. But it's not, the valuation is way too high for this. And if you look at the pricing along with a market cap, you will realize that it's the same, pretty much the same as the whole cannabis industry, and that shouldn't happen. A single company, I'm not saying it's a bad company, I'm saying this one company is being valued way too high and it's way too expensive. I can tell this is already a bubble. It makes no sense how the stock can rise so much over this short period of time, and I will really stay away from it until the bubble pops and rethink about the valuation where it's supposed to be, because it's way too expensive right now. And this is all I have for this video. If you guys like the video, please like, comment, and subscribe. Remember to stay hungry, stay diligent, and I will see you guys next time. Bye bye.